In business, shares of China's best-known robot maker Unitree surged on their first day of trading in Shanghai. The stock closing at 845 yuan, that's 460% higher than the issue price. CNA senior correspondent Guan finds out what's behind the stock frenzy.
Unitree has made a spectacular stock market debut. What exactly are investors buying into? One word: ambition. You can see a part of that here. Take this humanoid, for example. It costs about $20,000 US. This robot dog that can talk and dance, it costs about $1,300 US, less than an iPhone. This puts it within the reach of China's affluent middle class. But the reality is humanoids are still a work in progress. They still go mostly into universities, research institutes, and AI companies, not ordinary homes. I visited Unitree's Hangzhou HQ earlier this year, and they told me robots still can't make the micro decisions required in the real world to do simple tasks like fetching a glass of water or cleaning a room. And analysts agree.
Reality is we haven't really reached the so-called ChatGPT moment for robotics yet. You could argue that many of the robots are just a step away from being a fancy and big toy.
To make robots smarter, you need more data. To get more data, you need more robots in the real world. And to deploy more robots, you need money. That is where the Unitree IPO connects to a bigger shift in China. For years, Chinese households have been storing and growing their wealth in property. So much so that whenever property prices go up, luxury sales in shops like these go up in tandem. It's been called the wealth effect. But now data suggests a shift is happening. Luxury sales are now moving in tandem with capital markets, suggesting a shift in where Chinese households are investing their wealth.
In June, July, as part of the global sell-off in AI, Chinese A shares also suffer a bit. And you instantly also saw some slacking of luxury sales across the board in China as well. We don't know whether there's a causal linkage between them yet, but the correlation seems too strong to ignore. So that does seem that a lot of the wealth effect is now derived directly from the capital market.
And this shift in household wealth towards equities matters for robotics because this is an industry that needs huge amounts of capital to scale.
It's an easy way for the company to raise a lot of capital and then they can deploy quickly without the liability in paying back the debts down the road. But on the other hand, future equity dilution when they need more capital would be more higher.
So equity markets can help these companies scale fast, but repeated fundraising can dilute existing shareholders. And there is still the question of price.
The valuation is super demanding. I would say I will pause a little bit because basically that reflects the retail has a lot of hype, but that doesn't mean it's not a good company. But down the road, I think everyone has to answer, is it sustainable? I don't think it's sustainable.
And that is the bet behind Unitree. China is already very good at making the body of the robot. The challenge now is to harness the capital for the widespread deployment of robots for the massive collection of data. Only then can the brain catch up. The robots can already perform. The challenge now is whether they can do the work. Guan, CNA, Shanghai.